Thank you, Chairwoman Waters. One of the charter purposes of the SEC is to facilitate capital formation. Last week, a member of the committee asked Secretary Yellen how the administration's proposals to increase capital gains taxes, qualified dividends, and corporate tax rates would affect the competitiveness of American companies. Given your responsibility for capital formation and the research of the SEC, my question is, how would those new taxes impact the competitiveness of the United States to attract capital and investment in the world economy?
Um, Congressman Posey, I think that our remit is about the capital markets, and if it's all right, I think I should leave to Congress and the other parts of the executive branch to sort through taxes. But in terms of our markets, it's about transparency, it's about disclosure, it's about protecting against fraud, and it's facilitating these vibrant capital markets. Regardless, over the decades, Congress has decided on high capital gains and low capital gains, but we sort of are leave that to others and then try to facilitate through our rules the most vibrant capital markets for capital formation.
Well, that's a good walk around the block, but you know, one of your charter purposes uh, is to facilitate capital formation, and I'm just trying to find out if more taxes on corporate America and working Americans is the right direction to go from your perspective.
Again, I do appreciate the question, and if I weren't in the current role, I might have a lively discussion as a professor at MIT. But in the role that I have right now, it's really to facilitate capital formation through the tools that Congress has given the SEC, the tools of anti-fraud, anti-manipulation, and a focus on registering exchanges so that there's really efficiency in the middle of the market. Those are the important tools, whether Congress raises a tax rate or lowers a tax rate.
Okay, and just an assumption. I'm sure nobody else in the world is thinking this right now, but you know, the refusal to say yes or no kind of indicates that the answer is probably one you don't want to give, and that in fact the higher taxes are going to actually hurt your ability to
I, I, I,
facilitate
I,
capital
I
formation.
respect that. I just think that, I mean, there's things that you want me to discuss, crypto and China disclosures and the PCOB and the structure of equity markets, the structure of treasury markets, but I think you'd want me to leave tax policy to Congress and the executive branch.
Well, setting the policy is definitely the job of Congress and the executive branch. Just one, I think the average common person in the street would think that, the chairman of the SEC would have an opinion about whether we should tax American companies and American people and American families more, if that helps you do your job, or if it doesn't help you do your job.
What best helps do a job is discussions like this, of course, and trying to get the right resources to the SEC, and then working with my fellow commissioners to try to enhance our capital markets given the rapidly changing technology. I think tax rates again are the remit of Congress and the executive branch.
Well, I'm not trying to beat you up, and so I don't want to beat a dead horse. We'll just leave this subject for now. Uh, Given the time you've been at the SEC, have you identified any regulations or restrictions on capital markets that you think could actually uh, be relaxed? And if so, what restrictions could be relaxed?
I think in each of these reviews, and particularly as we review the treasury market structure and the equity market structure, what I've asked is how can we, in the 2020s, ensure that they're most resilient and efficient? And I think that that's really a critical thing that we can do. And the efficiency in the capital markets might, as you said, be turning a dial or changing some of our current rules. I'd also say in the crypto space, when I've said publicly that these platforms come in, talk to us, get registered, these trading and lending platforms, it's highly unlikely with 50, 100, or sometimes thousands of tokens that they don't have securities. But if they come in and they say, that transfer agent rule doesn't quite fit, or this custody rule doesn't quite fit for these new forms of capital formation, we should get into those discussions and talk about how we stay true to the mission that Congress wants us to do. But if we need to adjust some of these, sometimes very technical rules that were written in a different environment, we should see what we can adjust.
Thank you
Thank
very
you.
much. The
Chairman,
gentleman's time has expired.